Hello, how are we?
We're good.
Good, awesome. Welcome. My name is Emma. I work for WeWork here. How many of you have been to WeWork before tonight? Amazing, love to see that. So if you have not or you don't know much about WeWork is a global workspace provider. We have locations all over the world in all habitable continents. Unless you want to build WeWork in an igloo in Antarctica, but we have yet to see that. Anyways, I'm here to answer any questions about WeWork tonight, hosting this amazing event. Thank you all for coming, and we'll let the show begin.
Thank you very much.
Hello everyone, thank you for coming to our first AI in Boston FinTech meetup. And my name is Varma Santhali. I'm one of the co-organizers. And the idea when we started this organization, our community, the goal is to look at AI at a strategic level. Our plan is to bring in people and experts from various different types of outlook. And the idea is that we will bring in people from companies, from educational institutions and financial and other regulators. The idea is that each of them will have different outlook on AI, right? For-profit outlook, regulatory and public safety outlook, and future strategic, what is happening, and innovation outlook. We are planning to do these events at least like once a quarter, and we are looking for ideas and proposals, and feel free to send them in. And we have this meetup we are scheduling with Boston FinTech together. And I know many of you came through the Boston FinTech. We also have the AI FinTech meetup. Some of us came through that. In future, we'll be doing the AI meetups through AI FinTech meetup group. So do sign into that so that when the next announcement comes, it will go directly. And this event is sponsored by WeWork and Red Hat, and both of them WeWork generously sponsored these facilities, wonderful facilities, and Red Hat sponsored our food and beverages, and we thank them both. And Denise, I work with Denise in State Street. We did some great projects together. She has a long experience. She has worked long in financial services and quant areas, and she is very much interested in AI. And she did write up on AI transparency, etc. And pretty soon we'll turn it over to Denise with Fireside Chat with Jack.
Thank you. Thank you, Varma, for the kind introduction. Well, welcome everyone, and we are very honored to have Jack Klinck as our first guest for the AI in Boston FinTech. And we'll be discussing not just venture investments in AI, but AI as an innovation platform, what it means for financial services from a venture perspective. Before I turn it over with a number of questions, I'm just going to tell you about Jack a little bit. We're very honored to have Jack here. He has been an angel, a seed stage investor, entrepreneur, and held executive positions in large financial institutions such as State Street, BNY Mellon. He was served as the CEO of ShareNet, a marketplace for family offices to share investment ideas and co-invest in private companies. Prior to that, Jack was Executive Vice President and Head of Global Strategy and New Ventures at State Street Corporation, where he served on that firm's management committee and founded 2 business lines, which some of us are very familiar with these business lines since we worked in those companies, Alternative Investment Solutions and Global Exchange. Before joining State Street, Jack was Vice President and President of Investment Manager Solutions Group at Mellon Financial Corporation and also served as CEO of Mellon Europe in London. And before that, he held various management positions at American Express. This is very short compared to your background, but we're very honored to have you here. And would you share with us your journey now as the, in your current role as the managing partner of Hyperplay?
Yeah, thank you, Denise. Can you all hear me? Yep. Yeah. Well, just want to say thank you all for coming on a warm summer evening. It's a thrill to be here, and there's a few questions I know that Denise has prepared and that I will certainly do my best to answer, but I think we're going to quickly transition it over to you and let you fire away and have more of a discussion. It's a big group, but hopefully we can make it interactive and talk a lot about what's on your mind as well. To answer your question about the journey, I guess it sounds so long, all those things that I was doing. I guess I did them pretty quickly, but it really has a couple of common threads that I think are relevant to what we're talking about tonight. I really started in the credit card industry. And from the credit card industry, I went into the custody, the fund administration, the asset management industry. And what those businesses really are at their core are data businesses. They're data processing businesses. Just think about the credit card business when I was at American Express or at Mellon, and I helped get Capital One started back in the day when I was spinning out of Signet Bank. It was all about data, using credit card data, transaction data, and bureau data to target different types of customers and send them a ton of direct mail or other types of electronic messages to get them to respond. And you just take that forward, into what I was working on at Mellon and ultimately at State Street. And it really was thinking about the data business a little bit differently. Banks and financial institutions have always thought about their data as secondary to their core way of making money, which is either lending or deposit taking, or in the case of Mellon and State Street, transaction processing. Putting tolls on every transaction that flow through the pipes of the organization. And I guess it was really around the financial crisis when we saw a number of big organizations fail, that I had a bit of an epiphany about their own lack of understanding about the data that they had on their balance sheet or with their customers or their counterparties, and just insufficient risk type of metrics that probably would have resulted in some different business decisions and might have in fact even saved a few of those organizations that didn't make it. So more recently, when I was at State Street, it was really taking this thesis to another level and really thinking about the banking business as a data processing business, not as a transaction processing business. And really thinking, in the case of State Street, 17% of the world's assets flowing through the pipes of that organization every day. I mean, just think about that. That's just phenomenal. Huge scale, huge amounts of information flowing through the pipes that isn't really getting tapped into. It's not understood, it's not collected, it's not analyzed, it's not sent back to clients. And that was really the premise or the thesis behind putting State Street Global Exchange together, which the CEO and the board ultimately approved, to really think about how do we take a business which has declining margins, declining fees, global custody rate cards are going to zero, foreign exchange spreads are going down like crazy. So traditional businesses struggling on how do we think about turning the banking business really into a data business, and that's what it was all about. Certainly at State Street, and I'm just proud that they continue to share a lot of those strategies and views. And I think we've seen in the case of the Wall Street banks, the insurance companies, they all have data science teams now. They're all really thinking about their data a lot differently. And we wouldn't be sitting here tonight talking about AI if we weren't talking about data. And you've all heard the quote about data is the fuel that powers AI, or there's all sorts of similar expressions that are out there. But it's really about data. Talking about AI is difficult because we have different mental images, we have different definitions in our own mind about what A is, what A isn't. It's an immature term. It's a young industry. At Hyperplane, Samara, who's here with me on my team, we always think about how do you peel that back, right? We don't get concerned about what the labels are around AI. We try to peel it back. So, as part of my journey, it's been really just thinking more deeply about data And how does data really factor into now in my current role, powering the next generation of new companies?
Thank you. So to your point, we're hearing a lot about AI. We're seeing a lot about AI, both in the industry and on the media. Some of it is hype, some of it is not. And one of the recent articles was talking about, from Harvard Business Review, was talking about building AI-powered organization, the journey to that organization, which is going to lead to data-driven decision-making, interdisciplinary collaboration, agile, adaptive, experimental mindset. But we are looking at AI as a new platform, as a big umbrella term that is a platform, and expectation that it is going to meaningfully impact our industry. Now, having said that, we are, as you said, we are in the very early stages of that journey. And from your perspective, what is the current state of venture investments into AI or AI-related technologies?
I think the venture community is very excited about these new technologies. I think they see a lot of opportunity for different use cases around AI, in large global financial institutions. And I think as a venture investor and spending a lot of time now with entrepreneurs, it's somewhat remarkable to me that a lot of the large global companies aren't focused on this more themselves. Many of them are. But I think there's an awful lot of innovation occurring, right here in town or across the river, where people are looking at, very specific types of use cases and how those can be explored and dropped into workflows of these large organizations. So I think we're very early. I think, again, AI is a little bit of a tough term, in terms of how to define it. I think a lot of people start at the high level, which is it's a machine that can replace a human. And make decisions based on data. I think that's a simplistic but accurate definition. I think there really aren't too many decisions in large companies yet where that's happening on a true production basis. I think there's a lot of assisting and kind of co-piloting that's going on as different types of AI applications are getting dropped in, whether it's into risk analytics or compliance or even trading systems or post-trading systems. But there's no doubt it's going to happen. There's just too much pressure either on the cost side of the equation to reduce expenses or for customers who are demanding more intelligence and better ideas, which is what we're really interested in at Hyperplane, is thinking about new revenue streams, ways that that data can be used to help companies run their operations more efficiently. So I think there's an awful lot, and the venture community has really rushed into the space pretty well. I think companies and entrepreneurs are always struggling to get funding. That's just the nature of the beast. But I think we could talk a little bit more about what distinguishes a strong company from a weak company. But I think funding is available. We only do emerging technologies at Hyperplane. We're looking for companies that are tech-centered, tech-focused. That it revolves around the technology and how can they build a business model that can be applied in a B2B setting to be successful.
Thank you. And I'm sure that we just touched on some of the use cases. One of the recent articles that was published last week or 2 weeks ago was talking about how AI could shape the future of the investment banking, from the data collection to, as you said, predictive analytics, trade processing, compliance. So what are some of the promising examples that you have seen from a venture perspective on the AI opportunities, promising cases where, if you can share with us from them?
Sure. Yeah, and I guess I might expand the question, because I think when we say AI, again, sometimes we can get tricked. So from my perspective, it's really about what startup companies are really thinking about data, because data is what's going to ultimately power these models that are going to make decisions. Because I think a lot of the companies now really probably aren't truly at an AI stage yet. They may be doing some aspects of machine learning or using neural nets or other types of technologies, but in many cases, they're still just at the seed stage, at least, gathering data, tuning their models, looking at very specific use cases within organizations to be successful. So we've seen this in a couple of different places. I mean, one would be as it relates to quantitative trading. Quantitative trading, just by definition, a lot of it is run today by machines and computers. It's a very data-rich environment, and in fact, I think one of the key industries where AI will continue to excel and flourish will be financial services, because it's data-rich. There's a ton of data that's just generated and committed every day in our industry, so it makes it a really good place for entrepreneurs who have ideas. They may not know a lot about finance, but they're saying, okay, where can I try this model? Where can I get the data? Finance kind of rises to the top, right? And that's why we have the FinTech Sandbox right here in Boston, which has close to 40 different companies now supplying data, for a limited time for free to these entrepreneurs to be able to start to build their companies. So we're seeing use cases in the front office of investment managers. A company that's very close to me personally, and a lot of you know, is Elson. I don't know that Elson could necessarily be labeled as an AI company, but they're definitely a very data-intensive company. They're grabbing different data feeds that are coming from a myriad of providers and helping gather and collect and collate and synchronize and reconcile data coming from a myriad of places, putting it into a usable format. You've all seen the statistic, right? That 70% of a data scientist's time is spent on getting the data right, and only 30% of their time is spent really doing the analytics, right? That needs to be inverted. So Elson, for example, is a company where that can be inverted, right? There's a tool that can do a lot of that scrubbing. And just think about some of the tools that these asset managers and fund managers and analysts are using today. I mean, most of them are using something called Excel. Right? I mean, Excel is, I'm not sure how old Excel is, it's at least 20 years old. It's not a very powerful tool for these large, complex data sets that are getting updated on a very continuous basis. And people, go into Excel and then they go off Excel and they build macros and they don't always get the coding right, and there's, all sorts of potential for errors. So I think that's a very rich space. Another space where we're seeing a lot of activity at the moment is in insurance. Insurance, I think, is a bit behind banking and asset management. They're still digitizing some of their core workflows. Believe it or not, one of the key ways that brokers and carriers still communicate is with the fax machine. That's still out there. So there are companies, one here in town called Tower IQ, for example, that's really digitizing the whole workflow and communication stream between brokers who are representing clients, getting property and casualty bids on various types of insurance, and being able to communicate that out seamlessly to carriers who can quote and then ultimately underwrite insurance policies. It sounds so simple, right? But you just think about all the paper that's involved today and all the antiquated transmission that's used to communicate. Being able to kind of just digitize the workflows, not necessarily AI, but ultimately you can think about, well, what can that company become? They're sitting at the intersection of all the traffic between the carrier and the broker. They're seeing all the information going back and forth. They actually have commercialization rights to be able to harvest that data and ultimately do something with it. I mean, just think about building a benchmark. Thinking about being able to sell that data back to different types of communities. Maybe it's hedge funds, for example, who might find a way to trade off it. Think about the use of that data for the 50 state insurance regulators that are trying to understand risks and how they're getting priced. So there's just, your mind can run wild when you start to think about what can this be. But if they don't have the opportunity to capture and monetize the data, then a lot of those things won't happen. A few other types of companies we're seeing that are pretty prominent at the moment that I think are gaining traction are in the compliance and reg tech space. I think that's partly because it's harder to go into a financial institution and try to sell them on, if you buy this product, you're going to increase your revenues. There's always a high degree of skepticism, rightly so. But if you can go into an organization and say, we can help you be in better compliance with your regulator, we can help you reduce risk, reduce cost, those messages travel further, more quickly in the organization than the ones that relate to more marketing and sales and revenue. So we've seen a number of companies really focus on different parts of AML and KYC, being able to look at the onboarding process, how data is collected from customers, how new accounts are opened. That's a real bottleneck. As many of you know, you've all tried to open accounts at banks, and just think of the hurdles that institutional customers have when they're trying to open an account at a large financial institution. It takes a long time. It's subject to a lot of regulation. There's been regulators who have come in and tipped over the rocks and found that organizations weren't properly complying. There's been a lot of fines, a lot of headline risk around AML and KYC. So that's another area where we're seeing it. And I guess a final organization I'd mention, another Boston company, not a hyperplane company, called Encore. And it's not the casino. ONCORPS. They really are using AI and machine learning in the back office around fund accounting. So you just think, there's many of you from State Street and Fidelity and others in the room. There's a lot of NAVs that are getting struck, every day around here between 4 and 6 p.m. There are a lot of rules-based approaches to looking at pricing and prices from yesterday versus prices today. There's a lot of exceptions. There's a ton of false positives that kick out of the system because they're just not able to update quickly enough. And so this is an organization that's looking at all those data feeds, being able to really use a machine to actually determine which are the false positives and which aren't, and be able to greatly reduce that exception queue that piles up, at the analyst's workstation every afternoon, before the NAV is released. And there's companies like Natixis and PIMCO and others that are now using this as part of not only their own fund accounting operations, but also as a way to provide oversight to the custodians that they might have outsourced their fund accounting to. So they can really be able to go to their regulator and say, we as an asset manager, we have a handle on what our outsourced administrator is doing. We can look at the data flows. We know what's happening there. And so this is a company that's really starting to take off. It's been well under the radar. They haven't raised any venture funding. They're kind of, I won't say they're in stealth mode, but they're quiet. But they're quickly built a series of models that are highly effective using large amounts of accounting data to be able to help that whole back office process run a lot more efficiently.
Thank you. I'm also aware of a few of the startups that are actually coming up on that area. They're looking at kind of the validation level for all of the data in different aspects of the organizations on the financial services side. It's remarkable where, how some of these larger firms are now starting to embrace, maybe not as fast as we would like them to. But what are some tips that you can share for coaching an AI or data machine learning company to pitch into a large company from a venture perspective? So you hear a lot of pitches.
Right. No, that's a good question. I think they're, I guess I'd start by saying, it's called FinTech for a reason, right? It's finance and technology. At the risk of generalizing, I would say that Boston generally tends to be, in terms of the entrepreneurs, sometimes a little bit light on the fin and high on the tech. And in New York City, it's the reverse. High on the fin, a little light on the tech. And you need both to be successful. And I think the real key for me when I talk to entrepreneurs and startups is I think that many of them underweight the importance or the value of domain knowledge and expertise. So just pick one of the examples I was talking about, whether it's fund accounting, whether it's compliance or AML. Frequently some of these companies are born out of MIT, they're born out of engineers, they're born out of technology. They don't always understand deeply enough the workflow, right? The workflow and the way the data moves through an organization is absolutely critical for a startup to be successful. And to think that you can be on the outside looking in and identify a problem and build a product to solve it is extremely rare without really bringing in people onto your team, whether they're full-time employees, they're advisors, or they're board members that were in that industry and have much more firsthand experience about the inner workings of how the company operates today. And getting that 90% correct isn't good enough. You've got to get it more like 99% correct to be able to go in to that organization and effectively communicate the nature of their issue and the way in which it fits in. And where we see a lot of companies really struggle is they tend to modularize or componentize their product offering in such a way that it doesn't really take into account the work that's happening upstream and downstream. And you can't just take, for example, the settlement of a trade and surgically remove a chunk in the middle, drop in the startup's new software, and think that it's all going to flow in a straight-through manner, efficiently and accurately. So we see a lot of startups that may have great technology, but they need deeper appreciation of the problem, and that can be solved by better domain experience. Deeper appreciation of the workflows, really understanding the broader, bigger picture. And then ultimately, it's also about how do they communicate and work with the bigger companies. I mean, we really believe, in our model at least, that it's about partnership. If we were sitting in San Francisco, we'd be talking about disruption. I don't really subscribe to the disruption theory as much as I subscribe to the partnership theory. And I think there's a lot more that the big companies can do, and we can talk about that if you'd like, in terms of how they can be more effective at partnering with the startups, and there's a lot more that the startups need to do to up their game. I mean, in some cases, it's just simple stuff like arrive 15 minutes early and don't wear flip-flops. I mean, there's some basic things that they can do to improve their odds of a second meeting that they don't really appreciate. But it's some of those more serious things I mentioned a minute ago, which I think are really critical to helping them get, ultimately to a second and a third meeting, and really being able to demonstrate expertise, not just the tech. The tech alone isn't sufficient. They've really got to be able to be pinpointing the problem and demonstrating that they've got an understanding of what happens pre and post what they're working on.
Thank you. Before I open it to questions, I'm just going to have one last question to you, Jack, about your predictions for future. So we talked about, pretty much partnerships, how venture investments are going to AI, machine learning, and data-focused companies. But looking at, from your perspective, predictions for the future, do you think that AI would ever be applied to the venture capital world or role?
Well, it already is. So I guess I need to be careful. If I'll have a job tomorrow. I mean, there are 4 or 5 firms that are very publicly using different machine learning and AI techniques, to try to build a portfolio of investable companies. There's one called Fly VC out of Berlin. There are a couple on the West Coast, and they're using all sorts of what they would consider to be, leading indicators in order to make investment decisions, right? In one case, there's a California VC that's actively tracking 8 million startups. And they're looking at things like downloads off, the App Store. They're trying to find, social media hits. They're, trying to gather any and all information about a company because they probably can't get things like financials, right? But they can look at PitchBook and Crunchbase and press releases and website hits and all other what they would call proxies for success. And so there are 4 or 5 venture firms now that are, I don't know that they're actually at the end of the day making the investment decision solely on what the machine is telling them, but they're certainly using a lot of, there's no way that any venture firm can look at, 8,000 firms, let alone 8 million firms, right? So you're able to just greatly expand your universe. And depending on how you want to set the parameters, that can control what flows through the bottom of the filter and how many companies you want the humans to look at. So I think it's going to impact everything that we're doing. I don't have any great crystal ball, only to think that we're in the early innings of this technology. I think it's incumbent upon all of us here and many of us who aren't here to really think more specifically about how we can build better use cases, how we can think about the technology, and how we can really drive more partnership. And I think Boston has a really unique opportunity here. I mean, we have a lot of the right ingredients. We have venture capital. We've got top-tier universities. We've got top-tier global financial institutions. We've got unbelievable entrepreneurs. One thing that we don't have, and some of you have heard me rant about this before, so I apologize if you've heard it, is that one thing that we don't do enough of here is celebrate our successes. We're a bit common tomorrow, but when we have a big winner or have a unicorn, we're all a little more sanguine about how we celebrate that. I think we need to do a better job at elevating Boston's position globally as a fintech center, and I know Sarah and others here are working their tail off every day to do that because we have the right ingredients. We don't necessarily have the right recipe, putting them all together in the mixing bowl yet, but I think it's coming together. I think the opportunities are very, very large, and if we can get all the various people working together a little more thoughtfully, there is just huge opportunities for Boston to take the lead, particularly around businesses where we have great leadership, whether it's insurance, asset management, security servicing, asset management. I mean, there's no reason why we can't be right at the forefront of that. And I think over the next couple of years, we're going to see some of these companies pop out of the woodwork. They're really going to scale and take off.
Great. So we're opening up, thank you very much, Jack. I have a lot of more questions, but let's open it up for our questions. I see your hands.
Sorry to ask you a question out of the left field, but there's a company called Funds DLT, which replaces completely back end of all of the asset management and KYC and many other things, that produces, from what I was told by State Street people, basically everything that they produce in 2 weeks. It was less than an hour using blockchain. I'm just wondering if you separate AI into neural nets versus straight statistics, are you absolutely sure that blockchain would not outtake at least the statistical part of machine learning?
I'm not sure I completely understand your question, but I think I'm not familiar with the company, number one, so I can't comment about that specific organization, although any company that completely replaces the back office, I'd have to be highly skeptical of, at least as a starting point. I think blockchain, I didn't mention blockchain. I think blockchain is something that's continuing to evolve. I don't know if anyone in the room can actually cite examples of global financial institutions that are using blockchain in a commercially, production mode every single day, and they've kind of completely replaced parts of their system. I think, I'm not aware of any, at least, holding the definition that high. I do think we're going to have a lot of breakthroughs in blockchain coming soon. That's my own personal perspective, but at Hyperplane, at least we've looked at a ton of blockchain companies. We haven't invested in any, because we just find that in many cases it's a hammer looking for a nail. They start with a solution. In many cases, entrepreneurs, they have a great solution and they try to re-engineer back to the problem, and that's really difficult to do. So I think it'll happen. I think there are lots of use cases where a blockchain and a distributed system are highly effective, and I think, quite frankly, there are a lot of use cases where a central database is far better.
Hi there, my name's Holly. I'm here from Yopi. Nice to see all of y'all from Boston FinTech that I've met before. I loved your talk tonight, so I just want to say thank you. I agree with you completely on the fact that you guys have all the ingredients for the right recipe here. And the only thing I think you kind of jokingly tossed over is how do you really get in with the financial institutions, right? You made a joke about no flip-flops, etc. But I mean, I think in Boston, you guys have everything here, right? And it's not just about, as you were saying, let's elevate Boston. I'm here from Chicago. I travel every week to different cities. How do we all collaborate? And I think you guys have a lot of the keys right here in this city. But as you said, you're not celebrating your unicorn. So do you have any advice on how to get the greater pool here? How do people get into Boston? I'm from the Midwest, and when I come here, I always think, I'm going to Boston. Let's think, what are the Boston people going to think? It's very, very different than other parts of the country. So is there any advice you can give on how to really get in and, I guess, be local? Or, a way a startup could be successful in your community with all the keys to the perfect recipe as you described?
Yeah, no, that's a great question. In my own personal experience, living and working in London and New York, Pittsburgh and Boston is by far the hardest of those. At least they have a sample size of 4, right? You might think that New York or London being bigger are harder, but they're much easier. I think it's, I would just speak very personally. I mean, I have a much easier time sending my companies to JP Morgan or Goldman than I do State Street, in terms of getting the right audience. They've just got more people that seem to be interested in this and will take meetings. So, there's no simple way to answer that other than coaching these companies to build an advisory board or a series of investors that bring that domain knowledge, because in many cases what a board can do effectively or what an advisory group can do effectively is actually make the first meeting happen. And so, the second meeting has to be earned by the CEO and the people that work at the company. The first meeting, you call in a favor, right? And I'm calling in, fortunately when I was at State Street, I also ran global relationship management. I was head of marketing. I've kept my contacts very fresh. I work very hard to keep up a list of global contacts across the cities I've worked in. And I call these people up and say, I'd like you to take a meeting with so-and-so, right? And 9 out of 10 of them say sure, right? They don't even question what it is or why they should take it. So having those people as part of your startup are really valuable, and they need to be, you need a tech advisor, you need a strategy advisor, and you need someone who can help on distribution, sales, and marketing. Because if you're going at a B2B, which is again my assumption of what we're talking about, if you're going to try to sell to other companies, ones that are going to be very sophisticated, you need someone to help navigate. Someone that can help prepare you for the meetings, but also get you the meeting. There's no substitute for that. You're going to need a lot of at-bats because you're going to have a lot of strikeouts.
Hi, thank you for your talk. My name is Guillermo. I actually work at State Street as well. And so we talk a lot, you talked a little bit about the partnership versus disruption. And I was curious about your take on not only startup disruption, but disruption in the financial services industry from established technology companies such as Amazon, Google, Facebook, any of these companies that might come in. What do you think do you think they're interested in this space? And if so, how do you think they will enter this space?
Yeah, I think they're extremely interested in the space. I think, if you go back and you look at what some of these companies, including Walmart, Google, Accenture, others were looking at, pre-2008, many of them were looking to directly enter, into financial services. Walmart was going to have a bank in Utah, for example. I think the financial crisis obviously spooked a lot of people, rightly so. I think, the banks and insurance companies and many others, have this wonderful thing around them that they complain about all the time, but it's actually protecting them like hell, and that's regulation and compliance. There's no way that Google wants to enter a business that's going to put them under the purview of the Fed, right? It's just not going to happen. Same with Facebook. They're going to come right up to the edge of the line, and they'll do as much as they can, but that's what's keeping some of these companies, quite frankly, alive, is because no one wants to be in that highly regulated industry. No one wants to be dragged to Washington, although the tech companies are now, but up until recently it was the bank CEOs, before it was the tech CEOs. So I think, the banks have this moat around them. That's probably going to stay for a while. But I think if you decompose the actual businesses, and I did this when I was actually at Mellon as head of strategy, we actually took every business line that we were in and we narrowed it as much as we could into what we would think they would be as standalone businesses if we entirely broke up the entire company into as many small component parts that could stand alone on their own 2 feet as possible. And what we found at Mellon, at least, and this is over 10 years ago, so I apologize it's dated, is that only about 20% of the company would fall under the purview of the most highly regulated regime. And that the other 80% was either unregulated or much more lightly regulated. But that 80%, because it was part of Mellon, was subject to the whole regime, right? So you just think about the regulatory arbitrage, you think about the compliance costs. So these companies, many of them in California, have done that analysis, right? They've dissected the big banks. They know what businesses are really subject to the highest amount of regulation and which aren't. Banks are in many businesses that really on a standalone basis are unregulated. But because they're owned by the parent, they are therefore regulated. So we're going to see more encroachment, particularly because they're adept at data. Google and others have hired a lot of senior financial executives, right? I mean, the CFO at Google is Ruth Porat. She was, number 3 at Morgan Stanley. So there's more migration occurring every day of top finance people into tech. I'd love to see it the other way around. I don't know why the financial institutions, quite frankly, aren't hiring more tech guys at the top. It doesn't seem to happen. But I think the tech guys see this. You see what Facebook's done with Libra. I mean, that's a whole different topic. But my sense is that these guys are going to encroach more and more, and they're going to find partners. They're going to find other ways to circumvent the regulations as best they can. They're not going to subject their core business to regulation. But if they can get all the way to the edge and then at the last minute hand off the loan to someone else that has a balance sheet, for example, they're going to do it. So I think, we're going to see more of it.
With the progression of AI and algorithms in general, how many years out do you think until we see the regular human trader at these big corporations become useless? Not useless, but not hired as often, and the vast majority of them go away?
Boy, I mean, I don't know when. I think, probably what's replacing more traders than technology now is, Vanguard. In terms of all the money that's flowing into passive, out of active, I think that's probably, killing more traders than tech. But ultimately tech is going to hurt them as well. I mean, there's already a lot of quantitative trading algorithms. I think clients and regulators are always going to feel more comfortable knowing that there's a human in the loop. You could have an interesting discussion about what human in the loop means and to what degree is a human in the loop. It could be to a very high degree, it could be to a very low degree. My sense is all that stuff works really well when you're generating alpha, and then when something blows up, right, that's a whole nother conversation. If you think about, if you plot kind of the bull market against a lot of these technologies, we haven't really been through a downturn yet. We saw a little bit at the end of last year, and we saw companies like Wealthfront and Betterment that only have a web interface. We saw their small call centers completely blow up because people want to talk to a human when there's a problem, but they don't need to talk to a human when they're have a nice up and to the right graph of their asset appreciation. So I think we don't really know yet because we haven't really been through a full economic cycle as it relates to the markets. But it's probably, a lot of the human replacement theories that are kicking around in the world of ethics around AI, I think a lot of them are probably overblown. Oh, yes.
I just want to add to your question as well. Most of the startups right now on the AI side, the traction is actually on the compliance, automating the compliance components of it and oversight. So you actually have more of, what is promising and adoptable right now in the industry is actually if you partner with a human, like you said, where the decision, AI is more like a decision assisting tool rather than a full replacement. And in the cases that we have experimented with, it's an opportunity to get the retool some of the skill sets.
Again, a variation of the question. We talked a lot about AI applications in the investment world. I wonder, just from a VC perspective, if you're also looking at applications in commercial banking, retail banking, and where you're seeing traction, where you're seeing hype versus reality.
We've seen a few of those companies. You might have read that the JP Morgans invested in a firm now that's using a lot of advanced technologies to track the progress of private companies. Some of what I mentioned these venture firms are doing in order to try to qualify them for potential investment banking or commercial relationships. It could be lending or deposits. So I think JPM is probably one of the most advanced, I would say, in terms of using different types of technologies to screen scrape and grab all sorts of other data to then feed it back into in essence, their sales force, right? So they can say, look, this company's got tremendous growth rates. They probably need a line of credit, right? They're growing in Europe. They probably need, foreign exchange. So I think there are a lot of organizations that are using AI and other types of data gathering techniques to inform their own sales and marketing efforts so that they can kind of detect who those companies are. And that those used to be humans, right, that were sitting there like reading through things every day trying to come up with that. So I think that's happening. I think it's happening a lot with pricing as well, in terms of how commercial loans, and there's more dynamic pricing happening with deposits now, in terms of trying to target customers. So I haven't seen a lot of those businesses in Boston per se, more the traditional balance sheet businesses, and I don't look at anything consumer, so I tend to just, it's only on the B2B side, but I think there's absolutely more of those. I think there's a lot of startups, you've seen Robinhood and other examples on the West Coast of organizations that are trying to just completely go, direct to the consumer, right, without even partnering with one of the bigger banks. Yes?
Hey, Jack. You talked a bit about contrast between different institutions and how receptive they are to working with startups. Can you talk about different models that you've seen within institutions, whether it's strategic venture arm, innovation teams, labs, those sorts of things? What, in your opinion, works well, what doesn't work well, both from the institution's point of view as well as from the point of view of the startup who's choosing who to spend time with?
No, I think it's a really good question. I think it has to start very much at the top, because rules can be kind of put into place, goals can be put into place, but it needs to be very cultural. You need to have a leader that not only talks about it a lot, like a Jamie Dimon, for example, but also puts into his top 400 managers into their goals. That's really how you get results at these companies, right? Very goal driven. They look at their goals, they know how they're compensated. So I think it really needs to be pushed down. I think where I've seen a lot of organizations struggle is really around decision rights. Is it the tech people? Is it the strategy people? Is it the business unit? And there's just so many cracks and lack of alignment and agreement, and in some cases, infighting, quite frankly, over who has the decision to bring this company in? Who's going to pay for it? Who's the sponsor? Just tremendous. I've seen it happen over and over and over again. And I have to say that some of the New York companies, I think, have really figured this out ahead of some of the Boston companies. They've really cleaned, they put very senior level people, Goldman has a very senior level partner that's in charge of partnerships in FinTech. And that person's extremely accessible, and that person has the power to go into the halls of Goldman and make things happen, right? There are other organizations where it's just an endless battle internally. People say they like it, but, and it's a real shame. I think, they need to get out of their own way. They need to take some bets. It doesn't have to be corporate venture capital. That helps. I was on the phone this morning with BNY Mellon. They've got a team of 5 people. The head of that team reports right to Charlie Scharf, who's the CEO. And they've got tremendous influence to operate across the full width of the company globally, to bring companies into the company, to present them to business units, to make investments. There's a lot of talk about, well, these banks can't invest because of the Basel III rules and they're a global SIFI and they can't do this and they can't do that. Well, yes, they can. JP Morgan has made over 300 investments. Bank of New York today told me they've made over 12 in the last 18 months. So I think there's a lot of ways to do it. Some of it is putting their capital to work. I think, from my perspective, as a VC is, I'm a lot less interested in taking capital from those guys. I can go get capital for my companies. It's not always easy, but I can go get capital for them. What I want is I want revenue. I want a commercial relationship. I want them to use the product. If they want to throw some money into the company and be on the cap table too, that's great. But for me, it's about, does this product have value? Is there product market fit? And in a lot of cases, these companies never can really get to the true answer of that because they're just so caught up in internal issues around how's this going to work and where did this idea come from, and if it came from over there, then forget that. I think there's a lot of internal sorting out and cultural things. And I think it's got to happen at the CEO because, quite frankly, I've seen it happen at people who are at the SVP and EVP level who don't agree. And the startups pick up on that, and they have precious time, and they're going to go talk to others. If they've had 4 meetings and can't get any traction, they're going to go find other companies where they can move more quickly. So, it's a really tough issue.
What do you think is maybe missing, or what have you seen as best use cases for interfaces, APIs, to get these groups to flow end to end?
I don't know how to give you a simple answer on that. I think, most of these API, data gathering issues, a lot of them have been solved, quite frankly. I don't see that's where things break down. I mean, there's issues around permissioning and privacy and security and where is the data being stored? Is it in the cloud? Is it on-prem behind a firewall? So typically those are the issues that are arising. Almost all of the startups that we work with all build for cloud-based applications. But let's face it, if you're going again after global financial institutions, at some point you're probably going to have to build a version of the product that works behind the firewall on-prem, right? And that could be, in a lot of different, architectural configurations. But I think those are issues that the companies typically can solve. I don't see those typically being, large barriers to them, signing a contract, for example.
But you think that most of them will end up inside the firewalls?
I think it's changing. I think there are a lot of companies that have private clouds and are more, I think the comfort level, and in my sense, with the cloud is going up very quickly. Yeah, I think the regulators are getting more comfortable with it. I think the chief information officers at these companies are getting more comfortable. So we're seeing, there's still certain businesses and there's certain preferences and requirements, but I think the trend, there's no doubt about which way the trend line is going. I think it's hard to generalize and hard to average because some are being pretty speedy about it and others are more concerned about it. But I think people are feeling comfortable that they can store data in the cloud securely. And I think that we're not really having that debate anymore. I don't think, are we? I think most people are past that.
Yeah, and actually, there was an article just 2 days ago. Where they have the adoption figures for cloud is actually increasing much more recently because of the fintech and regtech startups. So I think we're doing one more. Last question.
On the way to that.
I guess more a couple statements from inside of the larger bank. Number one, cloud. I'd say 2 years ago we had a vendor come to us and say we're going to be cloud only. We're like, oh no, that's never going to get approved. But it was approved fairly quickly on an Azure system, and it's a lot more prevalent now. It isn't a barrier anymore. And then number two, what you were saying earlier about regulation. Jamie Dimon said that regulation is the best thing for JP Morgan because it prevents other banks from coming in.
Yep. No, absolutely.
Well, thank you very much, Jack. We really appreciate this. Was a wonderful conversation, especially for our first event, highlighting and you sharing your experiences with us. Before we close, Julianne will come. Julianne is one of our other co-organizers. Will come and make a couple of announcements. Jack will be around a little bit longer, so that if you have any questions, feel free to come over. And again, thank you very much. And Julianne, you want to?
Big thank you to WeWork for hosting us this evening, as well as Red Hat for being a very generous and gracious sponsor as well. A couple of notes before we close. As Denise mentioned, we have the space until 8 o'clock, so please feel free to mingle and continue to chat with each other and with Jack, as he has agreed to stay till the close. And a couple of other things. You might have noted we have recorded this evening, so to take the actual video for tomorrow, for this evening, will be posted on Boston FinTech YouTube channel. So please feel free to go out and take a look and review the conversation. And I think there was a mention of it earlier, but FinTech Sandbox is third annual Boston FinTech Week is scheduled for September 9th through 12th. We will also be hosting an AI session at that event as well. We have over 200-something speakers lined up for the September event. So please make a note of that on your calendar. Please keep an eye on the Sandbox website for further updates. It will be, I think, a tremendous event, and I don't think you're going to miss it too. So please keep an eye out for that. And with that, I just wanted to say thank you again, and to all of you. I hope you have a very good evening. Thank you.